Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Tonight, not only is it Hump Day, it is Fed Day. It is December 14th, and the big day is today with the FOMC giving their announcement later today. But we'll get right into that. First, we got a lot of economic data to go over today. So today we got a lot of data, and tomorrow we're going to have a lot of data. Tomorrow, Friday, will be a little bit less congested, but these next 2 days are going to be full. But today also, the FOMC giving their big announcement. So we'll start off with the retail sales for the month of November. We had back in October, which was revised lower from 0.8 down to 0.6. And then we had a forecast of 0.3, and it came in at a lousy 0.1%. So obviously not great retail sales here, as we were hoping, especially after the Black Friday and everything. Now, when you exclude out the big ticket items like autos, we got this one here, the core here, and we had a 0.6 again back in October, and the forecast was supposed to be 0.4, and it came in at, again, a pretty lousy 0.2%. Now, what they were forecasting, what they're seeing the trend of the sales was the first 2 weeks of the month before the election. That's when the slowest part of the sales. Once after the election happened, sales picked up in retail sales. Kind of like the stock market. After the election toss and everything started taking off, a lot of optimism were going out there. And that the sales, retails kind of benefited the second half, but the first half they were unfortunately not doing so well. We also got the producer price index. What this is kind of inflation numbers on the wholesale level. It's something we watch, but it's not the most important primarily because we look at more of the what's inflation costs associated to the consumer. On a wholesale level, even though sometimes the costs go up, it doesn't always get passed over to the consumer, so they have a little less margin sometimes, but they'll work with that. Whereas like the CPI and PCE are the two main ones we look at. But on the producer price index, we had a 0% back in October, and then forecast for November was only supposed to go 0.2%, and it jumped up to 0.4% here. So again, this is something we want to watch because we want to see if the CPI and the PCE go up, especially the PCE, which is the Fed, the gauge that the Fed most closely watches. We got industrial production. As you can see, we had some contraction here. Back in October, we had a 0.1% growth in industrial production. The forecast is supposed to pull back, come down at 0.4%, and it did come down 0.4%. Capacity utilization pretty much again came in expectations. We had a 75.4 in capacity utilization in October. November was supposed to come in at 75, and it came in at expectations. Business inventories contracted a little bit. We had 0% for the month of September. In October, it fell 0.2%, so they were not stocking up as much on businesses in the month of October. Again, at 11 o'clock Pacific Standard Time, the FOMC will finish their meeting. You'll start seeing it between 11:15 and 11:30 Pacific Standard Time when the Fed will give their announcement. It's expected that she's going to raise it 0.25%. But what the Fed is, what they're going to really kind of be looking towards is Janet Yellen's comments in regards to how they see the economy moving forward. I guess there's a lot of, she was being very encouraged to answer questions regards to how they see the economy moving forward with Trump's as the election. So they're basically telling her, discouraging her from avoiding any of those type of questions. They want to hear from her how she feels how the economy is gonna move forward with it. Also, they are going to be looking at the dot plot map to determine as to the frequency of the rate hikes that they expect in 2017. So they want to see, they want to get a good gauge as what they expect for where the economy is going in 2017, and the Fed, the pattern of what the Fed expects to raise rates next year as well. So those are the two big things that they're going to be looking for going into that. So right now the stock market is kind of positioning itself. It's down a little bit. After the announcement, we could see a lot of change. The stock could take off depending on what they hear from Janet Yellen and the rate hike and everything in the dot plot, if they're satisfied. So that's what they're kind of looking towards. The stock market in its kind of flux where it's been such an overbought position that they're kind of wondering, okay, are they going to have to give some ground, or are they going to have to wait for the profits and everything else to catch up to it? So that's going to be the big thing. And of course, as we talked about the FOMC announcement here. On the other hand, the bond market is kind of rebounding here. We did touch below this. We still haven't really got this into a rising territory. So, and right now I'd be very cautious. but right now we're up about 22 basis points, which gives us a little better pricing for at least today. But be cautious. This floor support here is showing that it's can be broken. We broke below it. Even yesterday we closed below this floor support, and usually when we break below it and it has that weak of a floor support, it could mean that we could have a big sell-off. So be cautious here going forward here. Hopefully we have a little bit of a rally today, but again, it could be at the expense of bonds and yields. We could see yields go up on 10-year treasuries. All right, folks, so stay tuned. Go ahead, go over to Twitter. I will be posting updates on Twitter. As I do every day, I do post updates throughout the day on Twitter. I'm at Mike Bjork here, and follow me there, and you can get, especially after the Janet Yellen's announcement later today, you'll be able to get those updates as we go throughout the day. All right, folks, have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.